Good morning, good afternoon, or good evening, depending where you are on the planet, and welcome to the Monday, the 17th of April, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. We're going to go through our usual regular run through in here today, but a slight difference on the Mondays, as we do go through the kind of bigger picture outlook for the week. What do we have for coming up? And that's going to be the bigger focus for the week. Why do we do this? Even though we're day trading at Trade Day, we do that because we have to know what's the potential volatility points in the week. There's going to be, if there are 3 or 4 potential volatility points in the week, like last week, we had potential volatility points on Wednesday. Okay, we had both the CPI and the US Federal Reserve minutes being released last Wednesday. That meant that the likelihood was that on the Monday and Tuesday, particularly with Monday being European markets and a lot of other markets globally closed for the Easter holiday, Monday and Tuesday were likely to be less volatile days. And you may be adjusting your trading strategy system approach to take that into consideration. So it's not just about what's going on today. It's certainly useful to look ahead, what is going on in the week. I've done this since I've been in the markets over 30 years, get a good idea, understanding of how the market is shaping. I like to call it the shape of the week. What's the shape of the week? What's the volatility shape of the week? Okay, because then it can give you an idea of what the volatility shape is going to be like today. Okay, so that being said, let's take a look back and look forward first of all. A look back at last week. What were the main things in here? Well, one, we're getting further and further away from the banking crisis. That doesn't mean it's over. That doesn't mean it doesn't have repercussions. That doesn't mean that it's not going to impact onto credit. That doesn't mean it's not going to impact for a potential another bank. But the further we move away, the less chance of there being a significant contagion. Okay, and then you get belief coming back into the credit markets, belief coming back into the banking sector, and so you get less markets are less on edge, and that all tends to be a positive, self-satisfying, positive, virtuous circle. Okay, so the further we move away, the better. Okay, it's like time is a great healer. Okay, the key standout points, as I said last week, were the CPI data, better than expected. And then we saw the Fed minutes. Now, even though the market chopped lower, initially up on the data, and then lower on the Fed minutes in here, they do think the Fed did say they expect that the banking crisis could cause a recession in 2023, but still that higher rates are required in the short term. We'll take a look at that, what the market believes, and we're probably expecting at least one more rate hike. But then on Thursday, having had the initial push higher on CPI and then lower on the Fed minutes, we did have a significantly strong up day on Thursday, and then the market really marking time on Friday. US earnings started in earnest on Friday. Financial sector, as ever, JP Morgan, Wells Fargo, BlackRock, Citigroup, all reported, mostly beating estimates in here, keeping markets buoyant. Okay, so what did we see last week? US stock averages were notably higher. S&P hit a multi-month high, highest level since February. European indices were also significantly higher. In here, the French benchmark index, the CAC 40, hit a new record high. That was buoyed by Louis Vuitton, LVMH, okay, surging higher in here, taking the CAC 40, the French index, to a new all-time high. US and European bonds pushed to higher yields. The dollar weakened against most currencies in here, hitting with the dollar index hitting a multi-month low. Gold to a new 2023 and multi-month high as the dollar weakened, although we did obviously see a rebound in the dollar on Friday and weakness in gold on Friday in reaction to that. And oil prices broke out to the upside, having been in a consolidation range after that big leap high that we saw at the beginning of April after OPEC Plus announced the supply cuts. What do we have coming up this week? Ignore this in here. This is a mistake left in from the previous week about Easter. Central bank-wise, quiet. We have some Fed speakers through the week, but we get the RBA meeting, the Reserve Bank of Australia meeting minutes on Tuesday, and then we get People's Bank of China on Thursday. Nothing to really bother us too much. US data is light, but we do get big CPI data globally. We get Canadian, UK, and EU CPI all coming out this week. Chinese GDP, UK employment and retail sales, Standout data though for the week is the flash PMI for S&P Global. So this is global flash PMI. So we're getting that from Asia, from Europe, and from the US on Friday. The flash PMI, remember PMI, Purchasing Managers Index. This is the flash PMI data from S&P Global, not the ISM data. The ISM don't give us their flash data. The flash data is a preliminary reading for this month, for April. So we get it early. Okay, so we get it on the 21st, and then we get the final data on the 1st of the month when we also get the ISM data. So this is a good read, a good take on what's going to potentially happen to the when the final data comes out in here at the beginning of May. Earnings season continues. Obviously, we've got some more financials coming through. Bank of America, Johnson & Johnson this week. But the big standouts for me, really, I think, Netflix and Tesla. Netflix, why? Netflix, a reflection of the global consumer. Remember, the US and global consumer. But we do get the banks as well coming through. So Bank of America, Goldman Sachs, Morgan Stanley, and Tesla, always one to watch in here as a bellwether for the global economy, for tech generally. ASML as well, P&G, all reporting. Let's go and take a look at the actual calendars for the day. Is very, very light though. Very, very little here. As you can see, the stuff's all coming through overnight. RBA meeting minutes. A lot of Chinese data this evening as well. Okay, that could impact markets if you're trading on the overnight session. Watch out for that Chinese data. GDP, industrial production, and retail sales all coming out of China. Also, the RBA meeting minutes probably not impacting us. Earnings, we already looked at. If I go back to, remember to do the filtering here. I've got just US and just the 3 stars. We're only interested in how, well, I'm only interested in how it's going to impact the indices. If we go to today, it's fairly light. We do get Charles Schwab and State Street, but they're fairly small companies. Are these going to impact on the S&P? Probably not. Okay, we've had some really big players out on Friday, and we've got some big players coming out from the financial sector this week. Charles Schwab and State Street, Charles Schwab less than $100 billion company, State Street $26.9 billion, so and M&T Bank even smaller. So not really that bothered about those coming through. Just a quick skip back to Friday in here, but we did already cover this in here. We can see the data in here. It was a sea of green pretty much, okay, from JP Morgan, Wells Fargo, BlackRock, Citigroup. BlackRock was only slight negative in there, and there's a very, 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 very slight miss on revenue. Going into this week, okay, so again, with that filter in place, you can see Tuesday, Johnson & Johnson, Bank of America, Netflix, all of that's going to be important. Remember over here to check out when they're coming out, either little sun before the market opens, little moon after the market closes. Okay, so in here I'm just going to share this calendar for you guys. It's just to put it in the chat there if you want to take a look. What else do we have? Goldman Sachs also Tuesday. I don't know if I just said that. Wednesday, Tesla. Watching out for that after the bell. ASML, chip maker. Watching out for that certainly. Abbott Labs, Morgan Stanley, IBM. Going through Thursday, Philip Morris, AT&T, probably less bothered about those in here. And then Procter & Gamble, really to end the week in here on Friday, the main focus there. Remember, we're looking at the large caps, and this does sort it automatically by the largest cap in this column here for each day. Market cap, you can see in here the big boys are at the top. And then going through to next week, I think we get the big tech coming through next week. But let's focus on this week first, right? Overnight, I'm going to run through this really quickly. 5 things to start your day. I've already gone through this myself. There's nothing in here, and the main thing is muting markets, which I basically got a load of articles in here saying nothing's happening. So nothing really of any significance coming over. Like stock futures, a little change. Wall Street awaits more earnings. European stocks steadies. Investors brace for earnings. These are all different sources. That was CNB. That's Bloomberg. This is Reuters. Futures subdues. Investors eye bank earnings. Right. European shares have edged higher this morning, and then in here we see the FTSE's actually hit a 1-month high, helped higher by commodity stocks going higher this morning. In Europe, if we look at where we are, so very little change you can see, but the FTSE is up 0.4. The DAX and the CAC are up. So yeah, a point pretty much unchanged. I don't know if we can give a quick look at the CAC index in here. I've got it on another chart, but does it show me? Can I do now? I didn't think so. You can't take a look at the bigger picture on this one. Not to worry though. But it did make a new all-time high last week. And if we take a look in here where we are, where we had a slight dip on Friday, futures in here this morning, you can see pretty much unchanged, slightly higher, about a tenth up across the major indices this morning. Let's take a look. The one thing I did want to point out in here is yields continue to go higher. I think it's important when we come to look at the charts. Yields are going higher, and I did highlight this. So on Friday, we pushed higher again. and then we're nudging higher again in here. Okay, so yields up. This is the US 10-year note. Yields going up, prices going down, bond prices going down. Still looking for these to continue higher. Okay, but what I think is really impressive in here is I should have done this before. I want to go to the Fed tool in a minute. Remind me to come back to the Fed tool, guys, if I miss it. But is here. Let me take. So the S&P made a new closing high back on Thursday, and then a new intraday high again on Friday. Okay, so really resilient, highest, not high, high for a multi-month high. Sorry, its highest point since back over here, since the now if I remember, this was for my birthday. In here since the 16th of February. Okay, so a new multi-month high for the S&P. The Nasdaq is lagging. Okay, and why is the Nasdaq lagging? Well, the Nasdaq's lagging because of those higher yields. That's the reason I wanted to show you the yield chart, because the Nasdaq's more sensitive to interest rates. Higher yields, okay, weigh a little bit more on the Nasdaq. Lower yields, lower interest rates. They're mostly growth stocks. It's all to do with the discounted cash flow. I'm not going to go into all of that, but it's because of discounted cash flow. If you want to go and Google that, because higher interest rates then mean the discounted cash flow is less for the growth stocks, and the Nasdaq is for the growth stocks. Right, that's the quick explanation. But anyway, higher yields weighing a little bit on the Nasdaq in here, but nevertheless, even though we've been tracking higher and higher and higher in the yields, big move back higher, been tracking higher in here since the beginning of April, a significant move higher in yields on Friday, nudging even higher this morning. It's not having a significantly negative impact on the Nasdaq. It's not like the Nasdaq's going down, okay? It's not going up. It's not performing quite as well at the moment as the S&P, but nevertheless, it's very, very, very resilient in here. And I think that highlights the underlying strength of stocks. So yeah, still even though we've got this little dip in here at the moment on the Nasdaq, for me, still remains bullish, kind of stuff. So we had that dip and a rebound on Friday. It's just sitting up at the top of the range, and it's the same for the S&P 15-minute chart. Dip and a rebound on Friday, having had the new highs, okay, and looking strong for me. This still remains very, very strong in here. And there's just, while I'm here, I'm just going to quick nod to the gold and oil before I go back to the Fed tool. So those treasuries still tracking lower. Remember, look to this potential topping on treasuries in here through that neckline, accelerated lower, failing lower, pushing lower, aiming lower. Lower prices, higher yields. Let's take a look at oil. Oil in here, we have dipped lower in here, but we're still inside Friday's session, and Thursday, Friday, and today's sessions all inside. So we had the Tuesday, Wednesday breakout. Remember, we had the big leap higher at the beginning of April. That gap in here was because of the cut in supply by OPEC plus. Then we consolidated very, 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 very sideways for over a week. And then we saw last Wednesday, Thursday, right? No, Wednesday, Thursday, I think, we had the breakout to the upside. And since then, the 12th, let me just double check that date on that one there. Just going to make sure. So yeah, Wednesday, Thursday was a breakout, and then we've been inside Friday. Then that's kind of Sunday's range in here, okay, and then Monday, Friday, Sunday, Monday, we are inside the trading for Thursday, okay, still inside pattern. So I think this is still resilient. This is kind of resilience like we saw in here, okay, and for me, all the threat remains to the upside. Here's the 30 minutes. I think it's held here now twice at like 81.75, and then you've got another support just below that, 81.25. If you want to have a quick trade, 81.75 down to 81.25 if it breaks there, but I'd be a happy buyer above 81.75 on oil. Let's look at a good gold. Now, we did get a big down day on Friday because of the strength in the dollar. Okay, so dollar was up. Here we go to the dollar. So the dollar's been in this downtrend in here pretty much since the beginning of March. Okay, and we've been flirting with this trend line. Reverse the trend line. Probably redraw this trend line on the dollar if it will allow me to do that. Okay, but it's still below this 13-period exponential moving average, but pushing higher on Friday. So this is a bullish outside pattern, like a bullish engulfing pattern in here, bullish outside pattern, having just nudged that, just approached this low in here from back in February, rebounded off of that. Okay, so the market in here, very much in here, trying to send a positive signal, but the underlying trend is still lower. So for me in here, and the gold reaction was to that. Okay, and again, look, 13-period exponential moving average, holding, pierced it on Friday back, and then pierced it again today back above. So I think there's a buy opportunity there on gold on this current swing back higher on gold. Okay, quick nod to the CME tool, and then I'm going to wrap us up. So this has leapt higher. Remember, this was sitting around 60, 65%. Not that I saw any real new news in here, but 60, 65%, this has been sitting at up at nearly 90% now. The market is expecting a rate cut at the next meeting. The market's pivoting a little bit away from its more aggressively dovish tone. So looking for that rate hike to hold through June, no new rate hike. And then July, still holding. And this is what the Fed have told us anyway. And then no cut now till September, okay? And then less of a chance of a cut as well. And then November, though, we are looking pretty much for a cut in here, maybe 2 cuts, okay, by September. So then actually below where we are now. And then by the end of the year, certainly looking below where we are now. But the market is now kind of pivoting slightly to appreciating the Fed and maybe staying on hold. I think we're going to see the markets meet. I think the markets will be less aggressive on their rate cut expectations, and the Fed will pivot to probably signaling there might be a rate cut later this year. I think that's the way that one plays out. All right, guys, any questions? Anything from anyone? No. Not seeing anything being typed. Okay, I'm going to wrap it up there, guys. I'm going to wish you all a great trading day. Please do take care, stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow.